Hello everybody, it's June 6th, 2022. We're going to take a look at Bitcoin, and first up is looking at what I said on Friday, on the 3rd. At that time, I said that we definitely had a 5-wave impulse down. It was very, very convincing, and we could have had a top, already right then, or we could go up a little bit, right? So I had these two resistance zones, 29.8 to 30.8, or potentially a more drawn out corrective structure up to 31.3 or so as a possibility. But it was likely to drop either immediately or from one of these zones. Then I went ahead and said, the major bear level to watch is this 29.3. If and when it sustains a break below that, we should get a pretty aggressive drop down into the 26Ks. And if it breaks 32.4 instead, then all of this is wrong. We've got to reevaluate basically. But it could still just be a move to about 34 before dropping into the low 20s. So most of these scenarios are bearish scenarios that I was seeing. There's really only one bullish scenario, and even that being a diagonal is not a great foundation to build a bull run on, which is what I said here. So again, corrective structures are very, very busy. They have a lot of chop going on within them, and they're incredibly difficult to predict because of that. So let's just zoom out here. I know I've got a lot of boxes on here now, and we are going to revise some of these, I think. Yeah, we're going to get rid of those. Okay. So this initial orange danger zone was based on this A and this B, right? And then C went up into that danger zone and then started coming down from there. But it started making a larger corrective pattern, and that's where the higher up danger zone came from here in the red. You can see that's right where we topped out. In any case, as long as we were below like 33.9, it's pretty clear that it was going to be a bearish move next, as long as we were below that level. And then right here, this is the convincing or fairly convincing 5-wave move down that I saw in the more micro level here. And so now, because we have this kind of double bottom thing here, it's a little unclear just, from an academic standpoint. Is this truly 1, 2, 3, 4, and 5 right here? And then this is A, B, and then a big C, that went further up than it should have. Or is this 1, 2, 3, 4, and a truncated 5, and then we've got some sort of ABC in here, or we're making an ABC now. I mean, any of that is possible. Seriously, until we break down below this 29.3 level and sustain a breakdown below it, we can still continue chopping. That is a possibility. So just need to keep that in the back of our minds. I don't see anything bullish about this. I'm certainly not buying at this level, but we can absolutely see more chop in the meantime, as long as we're above that 29.3 level, if we don't get a sustained breakdown. But in any case, this is how I'm choosing to view it. This is 5 waves down in initial wave 1. Here's ABC. So that top that we made earlier today is going to be my second wave top. And so we're now going to draw a FIB extension downwards to see where this may lead us to. Starting from here, that's the 1, and there's our 2. All right, so we have already reached the 764 of that, which is kind of crazy. So we may, typically you see a first wave go to like the 618, a micro first wave. So it would have been more typical to see that, a little bounce up here and then the breakdown. But perhaps we've just extended that by 1 degree and gone to the 764, which means a pop up to about 30.2 is certainly a possibility from this point before heading down further. I'm not exactly sure if that's going to happen or not. We could certainly push down further in the meantime. And in fact, this doesn't even need to be an impulse. This could absolutely be part of a larger, ABC down or something as well. We might be making more of a diagonal downwards or an ending wedge rather than an impulse down. Lots and lots and lots of possibilities realistically until we get some more info. So, keeping an eye on the larger term picture is really the best way to play this. I wouldn't get too wrapped up in trying to play the micro moves here because it can get quite messy. But let's just assume for a moment that we are in fact going to see an impulse. That would give us a first wave there, second wave here, like I said. Third wave, if that's an extension, third wave is probably going to go, instead of the 1618, it's probably going to go more like the 1764. Fourth wave up to about there, and then the fifth wave down right here to about 25.4. At the moment, that looks like perhaps what it's going to do if this is even an impulse. I know that's a lot of ifs, but we really can't put the cart before the horse here. We're going to have to wait for the action to clarify a little bit more before we get any real targets down here in the micro. I'm only talking about the micro, okay? Because the macro calls this the bottom right here. That says 22.2 to 23.8 is the expectation for that bottom. I'm hoping we get some truncation, which this would be a truncation on that, right about 25. I'd be certainly happy if this just bottoms right at around 25. Even down to 24, I'm okay. Down here, I get a little nervous on the larger term picture, I have to be honest. Larger term picture looks a bit fuzzy to me if we go down into that zone, especially if we get a sustained breakdown. If we get like a quick, liquidation spike down and then go back up, I'm fine with that. But regardless, I am accumulating. I've already accumulated some on this spike here. In fact, I was accumulating even a little higher. Had some initial buys right about there, bought some larger buys in here, and then I will buy my largest segment of buys down in this area, and even down here I've got some buys set down to 22 on the off chance that we do get that spike down. So I do have buys. I'm spot buying in that zone, and I'm, in addition to that, to protect against that and protect against these buys I already did, I was shorting in here. So I'm head short 100%, actually more than 100% at this point. I'm net short just to ride this final wave down and then fill up more with more confidence on the way down here with my additional capital. So once again, I got out, if you haven't been following me, I got out of crypto back in December. So I've been out since 50K and just been waiting for this bottom to happen basically since then. So I'm, I think I'm in maybe 10 to 20% of my portfolio is in Bitcoin and some of the other alts that I like. As of that spike down, I'm maybe 20-ish%, I think. So I still have 80% left in cash ready to buy down here, and I am head short, like I said, from this area, just waiting for that. All right. The only other thing I want to point out, on the hourly, you can see everything is certainly at an oversold area right now, which, if we were going to see continued chop, that's the area, we'd expect to bounce from. So up to 30.2, maybe even 30.6, certainly within the possibilities here before we actually progress downwards. If we get even more chop upwards, it's always possible because this is all corrective structure. We don't have follow through from either the bears or the bulls yet. So that's a possibility too. I'll be out of my head shorts if it goes above that 32.4, even though I really think it's probably going to go down again. I'm just going to stop out at that point just to be on the safe side, really. And then I'll look to really just kind of reaccumulate a little higher probably if I see some more action that would tell me to do that. But anyway, what I wanted to look at is the 4 hour, and on the 4 hour chart, even with this big candle here, we have a giant overbought signal still showing up right there. RSI has obviously come down a little bit, but certainly not into the oversold area yet. So this still looks very much like higher time frames are saying this is going down, right? Until this 4 hour RSI resets, or PPO resets rather, I don't think this has a chance of making a new high, but you know, obviously stranger things have happened. But and then this orange diagonal here, none of this is just like temporary right now. This was the possible bullish scenarios. That's a 1, that's a 2, and this would have to make an ABC up for a 3. It's really kind of gone a little bit too long in the tooth here for that even to be a possibility. I didn't think it was a strong possibility to begin with, but it's certainly looking less and less likely as we go on. But there is still a small possibility, if we do not get a sustained break of 29.3, that this does proceed upwards in a third wave in a diagonal. But again, even that could simply be a larger corrective pattern before going down further. So I have to be very clear on this. None of this action is signifying that the bottom is in. It is not a good foundation to build upon. It is not a good base for the bulls to build upon. I cannot stress that enough. We've seen it over and over and over again. Even this pumping here was all trash action. All of this pumping back here, even from the previous 30K low up to 69K, was all trash. And I went over that at the time. Not to say that I wasn't making money going up, you know, along the way, but as it was getting here and starting to stall out, at that time I was saying, you know what, this is looking like it can come back down to 30s. At 69K I was saying that. So anyway, you know, we really need the bottom to convincingly prove itself before we go heavy into this. And I'm certainly not looking for leverage longs anytime soon until a bottom is clearly in place, and we don't have that yet. All right, I think that's everything I've got to say, so we'll see what the rest of the week brings, and I will talk to you all on Friday. In the meantime, take a look at the suggested video here. That's the Bitcoin to 100K. If you haven't seen that yet, that's why I still believe we're going to 100K, as long as we, you know, remain above that 24-ish mark, preferably 24. And hit subscribe, hit the like button on the video, helps me out. Make sure you get the content as quickly as possible too for the next update. All right, everybody, have a great night.